Maybe you've seen an article where you hear that someone pays 0% in taxes. Maybe it's Donald Trump or these other billionaires that somehow pay 0% in taxes. You're wondering how you can do that. Well, I'm going to teach you exactly in today's video how you can pay 0% taxes in retirement and how you can create that tax-free income so that you can live your best life. Once again, my name is Taublieb. I am a financial planner. I am the host of the Early Retirement Podcast, and I'm the Vice President of Root Financial Partners. There are three accounts I'm going to be talking about today and how we're going to create this income. Number one is a 401k, and a 401k is tax deferred, meaning you get a deduction today. It gets all that taxes are deferred until later where you pay taxes on it. I'm going to talk about a Roth IRA. Now with a Roth IRA, you pay taxes today. It's never taxed ever again, and when you take it out, it's tax-free forever. And number three is a brokerage account. With a brokerage account, assets go in after tax. The difference is as those grow, you do pay taxes as transactions occur, like dividends or capital gains, unless you follow me on YouTube and you know how to pay 0% taxes, which I'm going to talk about right now. Now, let's assume that you have Apple stock and you bought it for $1, and now Apple stock is worth $100,000. Well, that dollar is your cost basis. Your $100,000, that's your fair market value, which means $99,999, that is what's known as a capital gain. Now, it's not a capital gain until you actually sell it, and if you sell it within a year, it's known as a short-term capital gain, which means it's taxed as if you just made more money. Now, that's with our normal marginal federal tax bracket system, and that's the same for state. The difference is if we look at holding assets for more than a year, you can pay 0% taxes on those gains. Here's how. If you're married filing jointly and your income is below $89,250, you pay 0% taxes. Yes, this is not a hack. This is not something secretive. This is not illegal. You pay 0% taxes, and it's known as tax gain harvesting. So let's assume that you retire and your income is very, very low. Well, you could go back to work and you could make some income, or you could say, hey, I've got all these gains. I've got $89,250 worth of gains. What if I pulled that income? Well, aren't I going to get taxed on it? When I say pulled that income, I know it sounds odd. What I mean is, what if you sold $89,250 worth of Apple stock that went up in value? You don't have to pay taxes on that. That's right, 0% taxes up to $89,250. Above that, you pay 15% taxes up until $517,200, and once above that, you pay 20% taxes. This is something that is so effective in retirement. Now, we want to ask ourselves, what's better? This tax gain harvesting strategy, where we pay 0% taxes, or Roth conversions, because Roth conversions make sure that we keep our RMDs, which are known as required minimum distributions, in the future really low, because if we just keep growing our money and take this 0%, well, great, we're living off of these dollars, but the reality is in the future, if you have a big 401k, you're going to be required to take out more money you may even need, and then you're going to have to pay extra taxes on it, which I want you to avoid. So tip number one with a brokerage account, you can take up at $89,250 tax-free if you have essentially held a large gain for over a year and your income is zero. So maybe your income isn't zero. Maybe it's $40,000 and you're doing part-time income and your spouse or partner, they're not working. Well, now between $40,000 and $89,250, that's what you could pay 0% taxes on. Any above that gets taxed at 15%. Now, everyone has the option of taking either a standard deduction or itemizing their deductions, and whichever is larger is the one you want to take. So now let's assume that you itemize and you add up your mortgage interest and charitable deductions and all these things, and if that number is larger than your standard deduction, then you want to take that. If it's smaller, like with most people, the standard deduction can make more sense, and the standard deduction is $27,700 in 2023 if you're married filing jointly. So if you have a 401k, make sure to distribute only $27,700 and you're going to have tax-free income, 0% taxes on that. That standard deduction is given to every single person who married filing jointly. So that's another benefit on top of the brokerage account of $89,250. You can add on this standard deduction and create even more retirement income, paying 0% taxes, completely tax-free. And the third way to create tax-free income is take all of your money from a Roth IRA. Your Roth IRA has already been taxed. So if you put $100,000 in and it grows to $1 million, you never pay taxes on those dollars ever again. Now, with that, many people go, amazing, shouldn't I take from that first because I don't want to pay taxes? The reality is I would not recommend that, and here's why. The reason I don't recommend doing that is a Roth IRA is the most powerful account that you have for tax-free growth for the rest of your life. And so how do we make sure we maximize that growth? Well, think of compound interest. If you have $100,000 and it becomes $200,000, then $400,000, and then $800,000, then 1.6 and 3.2, between 1.6 million and 3.2, that could be 10 years, and all of that growth is tax-free forever. So with Roth IRAs, it is almost like tax insurance, and so I recommend pulling from this account last because that is our most powerful account. So my order of operations is let's pull from cash immediately when we retire if we have the ability to do so because it keeps income low. If we don't have cash handy, let's look at brokerage accounts so we can pull income and keep cash and income really, really low. Then we start saying, hey, should we take from the 401ks or the IRAs? And maybe if income's really low, we look at these deductions like I just talked about, the standard deduction, and we pay low income. We look at tax gain harvesting and pay almost no, not almost, 0% income. So this is the beauty of this strategy is how do we make sure we're not paying a dime more tax than we need to? I joke with my clients, but I tell them, I'm all about being patriotic, but not to the point where you pay more in taxes than you need to. So with a quality financial plan, you can have $126,950 completely tax-free if you're looking at the standard deduction, if you're looking at tax gain harvesting, if you have no other income. That's pretty amazing. And that's something that not a lot of people talk about. And it's underutilized, in my opinion, because taxes just aren't as sexy as the investing, and so it just doesn't get the headlines. I love tax planning, and I love investment planning, I love estate planning, and so I take that 360-degree approach because to me, what I am is what's called anti-vacuum planning. And you might have heard of that term, but what I mean is I don't look at investments over here and tax over here and estate over here. No, everything has to be looked at together to create that wonderful, holistic, cohesive financial strategy. Here's the other pro tip. Your situation is going to keep changing, your tax situation is going to change, and tax brackets are going to change, and legislation is going to change, and life is going to change. And so this all sounds great, but until we have that financial strategy, that's where it all really comes together. So if you're looking for a custom strategy, feel free to reach out to myself or another advisor who resonates with you. Lastly, if this video has been helpful, please like this video and share it with someone you want to travel with in retirement. It's more fun to do it with friends and family. Thank you so much for watching today's video. If you don't know, I am the host of the Early Retirement Podcast, and this is what I love doing. I help people create a custom strategy to retire early. You can always reach out to me or a member of our team here at Root, and we would be happy to walk you through our planning process to show you how we can help you get more life out of your money.